When most people think about investing in energy, their minds immediately go to the usual suspects: oil, natural gas, maybe even renewables like solar and wind. But what if I told you there's a company quietly working on something that could change the entire landscape of how we power our world and potentially how we build wealth around it? That company is Oklo. Now, I'm not here to hype it up as the next big thing without context. Instead, I want to break down what Oklo actually is, why it matters, and most importantly, what it could mean for your investment strategy. Because at the end of the day, the goal isn't just to chase headlines, it's to understand where the real opportunities and risks lie so you can make smarter financial decisions. When we talk about energy investing, most of us immediately think about the giants: oil companies, massive utilities, and established renewable players. These are the safe, traditional names that dominate portfolios. But the truth is, real wealth often comes from spotting the shifts before they go mainstream. That's where Oklo comes in. What makes this company stand out is not just that it's in the nuclear space, but that it's pioneering something fundamentally different: micro-nuclear power. Instead of building massive plants that take decades and billions of dollars, Oklo is focused on smaller, modular reactors that can be deployed quickly, scaled efficiently, and potentially solve some of the biggest energy challenges we face today. Think about it this way: the world is demanding more energy than ever before, but at the same time, pressure is mounting to reduce emissions and move away from fossil fuels. Solar and wind are good, but they come with their own limitations: intermittency, storage issues, and land use. Nuclear has always been the obvious solution, but the problem has been size, safety concerns, and cost. Oklo's idea of micro-reactors changes the equation. These aren't massive projects that take decades of planning. These are smaller, self-contained units designed to be safe, efficient, and long-lasting. For an investor, that signals something important. When an industry begins to shift from large, cumbersome infrastructure to nimble, scalable solutions, it opens the door to growth in a way that wasn't possible before. It's like comparing the early days of mainframe computers to the arrival of personal laptops. Suddenly, what was once restricted to governments and corporations becomes accessible, adaptable, and in demand everywhere. That's what Oklo is aiming to do for energy. Now, I'm not saying this means guaranteed success, far from it, but what it does mean is that we're looking at a new frontier. For years, the energy sector has felt somewhat predictable: incremental changes, gradual adoption of renewables, and reliance on fossil fuels. Oklo introduces a model that could break that cycle and redefine how the world thinks about nuclear. And when you see a company that's not just competing within an existing market, but potentially reshaping it, that's where long-term opportunity often lies. This is why Oklo deserves serious attention. It represents a shift that could redefine the energy investing landscape. When you're looking at a company like Oklo, the question you have to ask is, what's the real value here? Investment. And the answer isn't just in the technology, it's in the scalability and the longevity of what they're building. Because when you think about traditional energy, whether it's coal, gas, or even large-scale nuclear, the challenge has always been that the infrastructure is massive, expense, slow to deploy. It takes years, sometimes decades, before a single project starts producing returns. That's a huge barrier for growth. Oklo's model is different. They're not trying to build one giant plant that costs billions and locks them into decades of construction. They're creating smaller modular systems that can be replicated and deployed in multiple locations. Investment. That scalability matters because it means the business isn't limited to one massive bet. It can grow in stages, taking on projects that are faster to implement and easier to manage. And for investors, that translates into something very powerful: the potential for steady investment, repeated growth rather than long periods of waiting followed by uncertain payoff. Longevity is another critical piece. These micro reactors are designed to run for years without the constant refueling or maintenance that you see with other energy sources. If they can deliver on that promise, it creates something rare in the energy sector: a system that not only generates consistent output, but does so with lower long-term costs. And that's where the competitive moat starts to take shape. Once a technology proves that it can deliver stable, low-maintenance energy, it becomes very difficult for competitors to dislodge it. What's also important here is the flexibility. A scalable, long-lasting system doesn't just serve one type of customer. It can be applied to remote communities, industrial clients, or even military bases looking for secure and independent power. That diversity of potential applications means Oklo isn't reliant on one narrow slice of the market. Instead, they can adapt to wherever the demand is strongest, which adds resilience to the business model. So when you step back and look at the big picture, the value isn't only in the promise of clean nuclear energy. It's in the way this company is positioning itself to scale quickly and endure over the long run. And that combination is what could turn a small, an innovative startup into a lasting force in the energy industry. Anytime you're looking at an emerging sector, especially one tied to nuclear power, the first thing you need to do is weigh the risk against the potential reward. And with Oklo, that's a big part of the conversation. On the one hand, you've got a company tackling one of the most complex and heavily regulated industries in the world. Nuclear power comes with layers of oversight, safety concerns, and political hurdles that can slow down progress. It's not like launching a new app or a consumer product where you can test, pivot, and scale quickly. Here, the path to execution is slower, more expensive, and filled with uncertainty. But here's the other side. When you have a company operating in a space with such high barriers to entry, the reward for getting it right can be massive. Think about the demand for reliable, clean energy. Governments are under pressure to meet climate goals. Industries are looking for stable power sources, and communities want alternatives to fossil fuels. If Oklo's reactors prove to be safe, cost-effective, and scalable, then the addressable market isn't just large, it's global. That kind of potential is what makes investors willing to accept higher levels of risk. It also comes down to timing. Energy transitions don't happen overnight, but they do happen in cycles. We've seen how solar and wind went from being niche, expensive technologies to mainstream energy sources that now attract billions in investment. Oklo could be at the early stage of a similar cycle for nuclear. That's where risk becomes opportunity. If you're willing to step in before the crowd, and you're positioning yourself ahead of the curve. Of course, the smart way to approach this isn't by assuming it's a guaranteed success. It's about recognizing that with higher risk, you size your investment appropriately. You don't go all in. You make it part of a balanced strategy where the upside potential justifies the allocation. Because if Oklo delivers, the growth potential could outweigh the risk many times over. And that's why for investors who are open to merging sectors, Oklo represents one of those rare chances where risk and reward align in a way that could redefine the future of energy investing. When it comes to building a smart investment strategy, it's never about putting all your chips on one idea. It's about balance, diversification, and making sure you're managing both risk and opportunity. That's exactly where a company like Oklo fits in. This isn't the type of stock you buy to replace the stability of blue chip holdings or the steady returns of index funds. Instead, investment, it's the kind of play you make when you want exposure to innovation, when you're willing to set aside a small part of your portfolio for companies that could define the future. Think of it as your growth bucket. You've got your core investments, the ones designed to compound slowly and predictably over time. But then you also want a section of your portfolio dedicated to potential game changers. Oklo fits into that category because it has the possibility to deliver outsized returns if its vision becomes reality. The key, though, is keeping the allocation reasonable. Too much exposure to a single high-risk, high-reward stock can throw off your entire balance. But by placing a calculated percentage of your portfolio into a company like this, you give yourself the chance to benefit from breakthroughs without putting your overall stability at risk. Another way to look at it is through the lens of asymmetric upside. With a stock like Oklo, the downside is clear. You could lose a portion of that small investment if the company doesn't deliver. But the upside, if it succeeds, is multiples higher than what you'd expect from traditional investments. That's why strategic placement matters. You're not betting your future on one company, you're simply giving your portfolio exposure to a trend that could reshape the energy sector. The beauty of this approach is that it allows you to participate in innovation while still protecting your financial foundation. You don't need to predict the future perfectly, you just need to position yourself in a way that if something big happens, you're not left out. And that's why in a diversified portfolio, a company like Oklo isn't just an investment. It's a calculated move toward capturing future growth